have a quick recap of market activity yesterday. We saw big cap stocks like Eagle really coming to the fore and managing to recoup some of their losses. What are your thoughts on the trades that we saw specifically around the likes of British American Tobacco, Eagle and Equity Bank?
Yeah, I think Equity Bank has had some very good, impressive results. 45% thereabout profit after tax improvement, with all the subsidiaries in the region turning into profitability, especially Sudan. So the results have been good, have been received very well. It went ex-dividend this week, and we saw some sell down. But yesterday we saw some renewed interest with investors coming back on the counter.
Carbacid has come out with their first half numbers. It's a small cap stock, but worth noting there because strong earnings per share growth up 28% and the dividend increasing by 50%. But let's run through the numbers. From the top line, we saw strong growth coming through, around 60% rise in turnover. Just run us through where the company is where the majority of their revenue is being generated from right now.
Carbacid is a very interesting stock. Last year we had a disappointing year where the revenues came down. But this year, these results have sort of redeemed the company from last year's disappointment. It's a company that I really like personally because besides just the robust growth, it has the best-in-class margins. The EBITDA margin is about 61%. This is almost twice what Safaricom has. If you look at the net margin, it's at about 37%, having come down from about 46%. Rarely will you see a company in any stock exchange that will give you where shareholders will be able to keep 40% of revenues. The other thing that I really like about the counter is that it is very cash rich. If you look at the balance sheet that they released yesterday, 24% of the assets is in cash or in cash, near cash assets. And this is, it has no gearing. This is an excellent business for anyone who likes a cash business. I think in a developed market, this would be a proper candidate for an LBO. Yeah. What should be of concern is to investors is probably the high cost of fuel and electricity in the second half. But all in all, it looks very, very attractive.
And of course, it's highlighting currency movements might impact earnings in the second half. We've seen how the shilling, of course, is trading just below 83 this morning. To what extent do we need to factor that in, the vulnerability of this company to unfavorable foreign exchange movements?
Sorry, please come again.
To what extent does will shilling's strength now play into their second half earnings?
Sorry, I'm actually struggling to hear.
Okay, we'll move on from that. Just in terms of growth for the company, as you say, it's cash flush right now, giving that back to shareholders in the form of a dividend. What about export markets and new export markets that they're looking to penetrate right now? Just tell us about the growth strategy of the company.
Yeah, there are a couple of concerns that have been raised. One is that EABL is looking to be self-sufficient on carbon dioxide. I think it already is. And Carbacid is looking at the export market as a way of cushioning itself. And there are some positive developments in the region that I think are supporting that. One is Submiller is entry into, boosting its capacity. And that I think will show up, will sort of cushion the company in terms of carbon dioxide market. The other one is the possible entry of Pepsi, and that also I think is a very good development for the company.
Let's just have a quick focus on Kenya Airways. We will be tracking, of course, the movements on the stock ahead of the scheduled rights issue, which will be launched next week. What are your thoughts on getting into this company right now with all the concerns that are facing airlines globally, the high cost base that they're looking at with that high oil price, and just, you know, there's just so many cost pressures that airlines are facing that many are very adverse to getting involved in the sector. But what are your thoughts on KQ specifically right now?
My thinking is that the rights issue discussion has gone on for too long, and this has costed the existing shareholders a lot of value erosion downwards. And I think the final closure of this rights issue is really a positive development for the company. I think the share price, the people who are conducting this particular rights issue, I think they sat down and they decided to come up with what is an irresistible offer price. Besides that, I think I like the fact that the major shareholders, KLM and Government of Kenya, have committed to take up their rights. There is also the presence of an underwriter, which is very reassuring. Then, of course, there is the threat of dilution. This is a massive rights issue, and I think that is the threat of dilution is enough motivation for shareholders to take up their rights. But wrapped up in all this, I also see an opportunity for an investor who is willing to play contrarian to the negative sentiment that has been expressed on this counter the last couple of months.